Welcome, Brian Doyle, to Wealth Matters Podcast. How are you, sir?
I'm awesome. How are you?
Good, thank you. So, Brian, can you tell us about yourself?
Yeah, absolutely. And first of all, I want to just say thank you for having me on your podcast. I'm happy to be here and excited to talk real estate. My favorite topic.
Appreciate
But
it.
yeah. So, anyways, tell you about myself. So, I am. My name is Brian Doyle. I live in Minneapolis, Minnesota. I grew up in Colorado till I was 12. After high school and college, I moved to Boston and then Colorado for a little bit. But I'm back here in Minneapolis and loving it.
So
I
you,
started buying. Yeah,
sorry
go
to
ahead.
sorry to interrupt. So you can't stay away
No,
from cold, huh? Cold and snow. You need cold and snow.
can't.
Huh?
There's something wrong with me. Yeah, I do have one. I have one condo in Tempe, Arizona. So
Oh,
maybe that's
okay.
my saving grace. But
That's good.
yeah,
Right.
exactly. I don't know. A lot of cold stuff. But so I did. So here's how I got started. And I bought a house in college. And actually, if you want to go really, really, really far back, I'll tell you a really, really fast story. My favorite story ever when I was a Cub Scout.
Oh, wow.
And
My daughter is a
yeah.
Cub Scout right now.
Oh, awesomeness. Awesomeness. I can't say enough good things about the Cub Scouts. So
Oh,
when
okay.
I was a Cub Scout, they gave everybody the popcorn sales form,
Yep.
and they said whoever sells the most popcorn in Colorado Springs wins a bicycle.
Yeah, we are
And
doing
I
that right
said,
now. I'm going with them
"Oh,
right now,
really?
doing popcorn sale door to door.
Oh my God, that's the best ever." Okay. It's like, so they told me whoever wins a bicycle or whoever sells the most wins a bicycle in our district. And I said, "Holy bananas, I'm going to win that bicycle." And they said, and everybody, all my other Cub Scout friends were like, "Dude, relax. There's a bunch of kids in our district. It's not just our pack. You know what I mean?"
Right.
And then I told all the leaders, I said, "Well, I'm going to win that bicycle." And they said, manage your expectations. You don't want to work hard and be disappointed and all this other crap. And then I told, everybody I could find, and they said, "Dude, okay, there's only one bicycle that somebody's going to win." And I said, "Well, it's going to be me." And I went out every day for 3 weeks after school from 2 o'clock to like 8 o'clock, 9 o'clock at night. And
Wow.
for 3 weeks straight. And guess what? I won that freaking bicycle. And I was so proud of myself. And I realized something when I was like 10 or 11 or whatever it was. I realized that if you work harder than everybody else, you're going to have anything you want in life, because 99% of the people that you're competing against aren't showing up. They make all the excuses. They say, "Well, somebody else is going to win the bicycle." Well, I'm not going to try hard because
Right.
I got football practice. Well, I'm not going to try hard because I don't live in a wealthy neighborhood, or I'm not going to try hard because most people aren't home between 2 and 5. And I knew that too. Most people weren't home between 2 and 5, but like, honestly, like, I still went out because I was like, they could be home, right?
Right. Right.
And you know what? And it worked, right? So I learned from that moment that if I work harder than anybody else, I will have more than anybody else. And now, more doesn't necessarily mean more money. More means more success, more
Right.
freedom,
Right.
more,
It's not just money.
love from your family.
Yep. Yeah.
Exactly.
When you are
Exactly.
successful, there are a lot of things which come with it, right? It's not just money or
I
wealth, right?
totally
You
agree.
earn respect, right, from others, right? So
You
that's a
earn
big deal.
respect.
But
There's so
an
many
amazing
people that are
story, Brian.
complaining.
Yeah,
Yeah.
that's an amazing
Well, yeah,
story.
thank
And
you.
and, and
I
what I
appreciate
can
that.
add to that is that if you are determined and passionate about something, you can achieve. No one can stop you, right?
Absolutely. I'm sure people said that when you start a podcast. People are like, "I don't know,
Right.
man. There's a lot of podcasts in the world. And how are you going to get guests and all this stuff?" And it's like, it's just like, you just make it happen.
Yep.
So, anyways, so that's that. But the reason I tell you that story is because you said, "Tell me about yourself." That's how I got into wanting to be an entrepreneur. Because honestly, in college, I was like, "Hey, I want to make this happen, and I want to be in charge of my own destiny," right? If I'm a
Mhm.
line worker and I'm making $7 an hour or $10 an hour, $15 an hour, or whatever it is, then I'm working harder and I'm worth more than the guy next to me, but I'm making the same amount because we're doing a job that doesn't value,
Right. Everyone is
value.
equivalent. Yeah.
It's like, how much value can I bring to this organization? So anyways, or to myself. So anyways, in college, I was like, I always liked real estate, because if you have a property that isn't performing, okay, you can go and you can paint the walls, you can
Yeah.
clean the carpets, you can advertise more. I mean, you have more control. If you own a stock, which nothing wrong with stocks, right? But if
Yeah.
you own stocks, you're a passive investor. You can't go and change anything about
You
how
can't do
Motorola
anything
is doing
about
it.
it.
Absolutely. And that's why I always liked real estate. And that's why I bought my first house when I was 20. I had just turned 20. It was like a month or two after I turned 20. I bought my first house in college and I rented it to my friends.
Nice.
And it was awesome. I loved it. And I didn't have a job. So I went down to the bank and I said, I need a loan. And they said, oh, you need a job. And I said, well, I'm going to rent it out to my friends and it's going to work out great. And they're like, you need a co-signer. So I called my dad up and I said, Dad, I'm going to send some paperwork to you. I need you to sign it. He said, what the heck are you doing? And I sent it down to him and he said, well, I better go take a peek at this. And luckily, I always knew he'd do it, because I don't know why. I just knew in my mind that he would handle that. But, one of the things I think people have to look for is what is my strategic advantage over everybody else? Okay. Every single one of us has some sort of strategic advantage. Yours
Right.
might be IT, right? You're
Uh-huh.
better at IT than anybody else, or at least than I am, right? So
Right.
that's your advantage over me. My advantage was that I just had parents that were always supportive of whatever I tried to do,
Yeah, and
right?
that's big.
So, and that was my advantage. So you need to capitalize on whatever advantage you have. You need to capitalize on that advantage. So, anyways, that was my advantage, and that's how I got started in real estate. That's how I bought my first
That
house.
that is amazing. So how many doors or units do you currently own then?
Okay, so right now I own and manage 60 units.
That is awesome.
Okay,
I wish
yeah.
I can
So
reach
it's not.
there.
Oh, you'll be there. I'm positive very
Oh,
quickly.
that is
But
amazing.
but so most of those are condos. Okay,
Uh-huh.
and then most of those are condos. I do have one 7-unit apartment building, and then I have one commercial building that I rent out. It was a former Pizza Hut. I rent out to a commercial kitchen. But all these things, like, they kind of, you start with one, right?
Yes.
Everybody I know started with one duplex or house.
Uh-huh.
And I think so many people that aren't in the industry right now, they want to all of a sudden have, quit their job tomorrow and have 200 units. And it's like, dude, just buy
No.
one, rip it
Yes.
off like a Band-Aid, buy it, and then move on to the next one. So that's where I'm at on that stuff.
That is
And
awesome.
then I'll tell you real quick. I'll tell you real quick. So the other thing I have is I have some investments in other people's properties.
Oh,
Okay. Now I know
that's
you're a
interesting.
syndicator, right?
Yes.
So I also have invested in other people's properties. So if you look at that portfolio, which I don't manage, and I
Right.
don't, I own just a sliver of this, but that
Right.
particular portfolio has about 500 units in
Oh, wow.
it, So most of them are like, anywhere from about, I think there's a 30-unit building in there to like a 90 unit or an 80 or something unit building.
Yeah. And I
But
think
that's kind of cool.
yeah,
Yeah,
and I'll get back to that one. You brought up a good point, but also just looking at your personal investment and everything else, it seems you are diversified, and that's pretty good. That's what I've been trying to do as well. Some single families to multi families, but you also have commercial, and you have invested in other people's deals too. So it gives you pretty good diversification because you always want to make sure that if you're rewards are capped, your risk is also capped at some point, right?
totally,
So
totally agree with that. Yep, absolutely.
let me ask you something about your goal. When you started investing in real estate, did you have a goal in mind, or you just jumped in?
When I first started with it, I always had this vision of my life. And I always had this vision of having a property management company, 5 or 6 or 7 or 8 employees in the office managing a portfolio. And I don't know, maybe I'm just remembering it differently than it actually was, but that was kind of always my vision for my head. My heroes were always the Sam Waltons of the world, and
Uh-huh.
this guy named Gary Tharlson, who I work for, I provide drapery for him in my full-time job. He's out of North Dakota, and guys like that. It's just people that live below their means and aren't in it because they want to, prove to everybody how flashy of a car they can drive. They're in it because they love it, and they're in it to build like generational type wealth. So those have been my heroes. Yeah.
So now I'm going to ask you a question, which would be the meat of this podcast, right? And which is why we are here. How did you juggle between full-time job and investing? Because you just mentioned full-time job, and that's why I'm asking. Do you still have full-time job, and how did you amass 60 units plus also invested in other people's stills throughout while you were working on a W-2 job?
Well, love that question, because a lot of people, they want to quit their job immediately, and they view their job as a hindrance, and I
Yes.
totally disagree with that. I view your job as like a benefit or an opportunity. And the reason is because I've always had enough income to live off of my W-2 income and then invest in real estate with, to keep the two things separate, right?
Uh-huh.
Right now I've got 3 kids and a family, so we're starting to eat into that real estate income, which is unfortunate. But really, for the last, since I was 20 years old, I'm 42 now. Since, for the last 22 years, I've been able to just leave the real estate thing alone and let that continue to grow and snowball, right?
But that's amazing
So
because you built for this many years, right? The equity plus, all the cash flow. Yeah, that's great.
yeah, no, absolutely. And it's slow at the beginning, right? Because you buy
Uh-huh.
your first one, it's slow. This year, 2019, I bought 5 condos, all free and clear for cash, out of cash flow that has been generated by this kind of machine that, you create. So it's been great. So how do you juggle it? Well, I think there's a lot of interesting steps, right? So
Mm-hmm.
number one, in my opinion, is you really have to have the right W-2 job. Okay. If you're
Okay.
a factory worker and you have to be there, and if you're not there, somebody else has to be there, then it's going to be, then that's fine. But then you're going to focus on nights and weekends on your real estate job. Okay.
Right.
The other thing is that if you love real estate, then it's not really a job, right? Like, all my friends would go golfing and they'd spend $50,
Uh-huh.
and I don't really like to golf, so I'd go and
And you
I
make
would
fifty
work on my
dollars.
real estate, and I make $50. Yeah, that's $100 swing in the
Right.
morning, right? So it's like, that's kind of fun. I used to go to Duluth, and I would sleep in my car because I knew that, like, I would have $100 more to spend on a faucet or something like that. So a budget is super important when you're trying to buy real estate. But to get back to your actual question, it's how do you juggle it, right? You've
Mm-hmm.
got to time block. You have to time block. You have to say, I'm going to be the best dang. So I sell blinds to apartments and
Oh, okay.
drapery to hotels. One, I found that job specifically because I wanted to work in the real estate industry.
Yeah, that's a good
Okay.
job because what's going on, right? You can see.
That's how I got in. Exactly. You get to go into all these other apartment buildings and look and see what kind of paint colors they're putting in, what
Yeah.
kind of blinds they're putting in, what's the latest and greatest carpet they're putting in. All
Right.
that stuff is fun for me. And then I get to share my knowledge with my customers. Like, hey, I tried this. You should try that too. This is going to be, it
Right.
really works out well. So I think if you're sitting down and you're listening to this podcast and you say, okay, I want to have, I want to start with the end in mind. Okay. So which is what Stephen Covey says. So I want 100 units and I want to take my full-time job, and how am I going to get there? Step one is I would look at my full-time job and I would decide, is that the right full-time job to propel you to your end goal? Okay. If it's not, let's say you're in sales and you're selling, I used to sell hazardous waste recycling services. So we'd recycle hazardous waste. Let's say, if I'm sitting down and I say, is that the right job for me? Well, yeah, I mean, it's fine. You can make income off of that, and then you can take that income and you can invest in real estate. But it might be better off if you went for work for a roofing company that sells to apartment buildings. If that's what you want to eventually do, get into that industry. There's plenty of jobs in there. Okay.
Right.
So just an idea, get a job that's within the industry. Okay. The other way to do it is then you can start, you got to get on a budget. You have to get on a budget, because if you make $5,000 a month and you spend $5,000 a month, you're never going to have any real estate money.
No.
Okay. Exactly. Right. You know that. I mean, so if, let's say you have $5,000 a month in income and you spend $4,500. Okay. Well, now you're saving $500 a month. Okay. Which doesn't sound like a lot, but it's something. And if after a year, then you've got $6,000, now you could invest potentially in somebody else's deal. If you want, a lot of people want $50,000 minimums and things like that, but at least you're getting to the point where you can start. You're not scraping by every month.
That's a great point.
I think the biggest hindrance to people getting involved in real estate is that they have money that it's like, if I lose this money, I'm screwed. My spouse is going to kill me because because it's all the money we have. We need that money, right? And you've got to create a situation where you have a false income, where I think you save 50% of your income. If you make $5,000 a month, just mentally tell yourself, I only make $2,500 a month, and figure it out on $2,500 a month. And then you can start reinvesting that $2,500 a month. And now you're dealing with some big numbers. Right. Now at the end of the year, you've got $30,000.
Right. That's a great advice, by the way. Yeah, and it makes so much sense, because either, people have excuse for not investing, or they have fear, right? What you mentioned. Some people have excuse that, I work W-2, I don't have time, right? So I can't invest, I'll just do stocks or whatnot. Or they have fear of losing money. But as you said, create false income. And every investment you make, be it stock or anywhere else, there is always a risk, right? But unless you do it, you are not going to learn.
Absolutely. No, you learn by doing. At least I do.
Me too. So, I can't just sit on sidelines and read all the books and just listen to podcasts and think I'm an expert.
No. No. I love listening to podcasts, and sometimes I get mad at myself for listening to them, because I'm like, what the heck am I listening to this for? I need to hang up and make some cold calls and find another deal. You know what I mean? But it's fun, right? It's fun to listen to them. So no, I'm totally with you on that. It's like, it's like, do it, just do it. So I love where you're going with that.
So another question I have, juggling, and then there is another problem, as you mentioned, right? How do you bring your spouse or significant other on board with your idea about investing in real estate or something else? Because that requires, one, as you said, you could lose your money. You have the fear, and second is you may be spending some additional time trying to analyze the deal, or going after, making cold calls and whatnot, or trying to look at some properties, right? So
yes,
you can't be just working 8 hours a day anymore. So how did you do that?
Well, that's a good question. And I luckily started investing before I was married, right? So that was just, so maybe that's the answer. Just start investing immediately, so when you do get married, then but so it was always my identity, almost. I always viewed myself as a success. I always viewed myself as different than anybody else, and I don't mean that arrogantly. I mean that, like, I was just, all my friends were, like I said, golfing or buying new cars or something like that. I didn't want anything to do with that. I wanted to invest in real estate. So it wasn't like this idea that I had that came out of my head, one day. It was like, that was my identity,
Uh-huh.
it still is my identity, if I didn't have any real estate I really do identify with that. So I think for me, at least, that my spouse was just like, yeah, this is this is the person she was attracted to, and this is why she, so it wasn't a big sell for her, I guess, is what I'm
That's a great point. But someone who is married, I think they just need to, have a sit down and have a talk and figure out their future plans or goals. And maybe
Yeah,
that would be one way. Like that's how I did it with my wife. That okay, we
yeah,
investing in real estate stocks as well. But at some
yeah,
point, I can't rely on stocks, and I want to have monthly cash flow, which not gold or not stocks. They can't give me. Um, as well as the equity is building over time. So I just have a sit down and have a chat about the plans and goals and create that false income as Brian mentioned. That's a great advice as well.
well, if you look at the average family in America, the average family income is like $56,000 a year.
Right.
Okay. So, I mean, I don't care what you make. Anybody listening to this podcast is probably motivated and a driven person, right? So chances are they're making better income than that, or at least comparable to that, right?
Right.
So if the average family can live off 56,000 a year, and I'm not saying we do, but if the average family can live off $56,000 a year, there's no reason you can't as your family.
Yeah.
60, 50. And the other thing is, got to pay attention, right? So it's like, I guess, my wife and I, she's awesome in the fact that, I love talking about finances. That's like my favorite topic in the whole wide world. She just doesn't love it like I do, right? But
Right.
she's an adult and she understands that it's important to look at these things, right? So every week we always have this kind of standing, budget meeting or spending plan meeting where it's like, okay, we've got this much money to spend, this month. How are we going to get the maximum enjoyment out of this much money? Okay. And I think that's been a good way to so that we're both on the same page, where if she says, no, I really want to go to Arizona for Christmas, and then it's like, okay, if that's important to you, then let's make that happen. Right. So,
Wow.
um, so I
I'm
think that's one way to do it, is to sit down on a regular basis and discuss how are we going to get the most value out of this money.
Yeah, I'm loving this, by the way.
I'm loving it too, man. I'm glad
Yes.
you're. I'm glad we're having this conversation.
So
So,
let's take a
uh,
break and we'll continue chatting with Brian. Welcome back to Wealth Matters podcast. I'm chatting with Brian about how to juggle between full-time job and real estate. And Brian, you give really good advice and some great points before the break. I have one question though about because you have been doing this for 22 years. Have had a horror story you would like to share with my listeners, which could or which did affect your full-time job, or which could have but you were able to manage, and if you were able to manage, how did you manage and what did you learn from it?
well, I have a horror story, but it's like the worst horror story on the face of the planet. So I don't know. It's like too scary for most people.
Wow.
But I'll tell it to you because you know what? It's one of my favorite stories because you know what? Because I think it says a lot, right? So here's my favorite horror story ever. And one of my only ones, to be quite honest with you.
That's
But
good.
here's my biggest one. Yeah. So anyways, long story short, I was a young buck. I was probably 24 or 5. I was up in Duluth, and I gave my what did I do? I gave my business card to the inspector up there, and I
Hmm.
had said, "Hey, Mr. Inspector, um, if you ever come across a deal that somebody doesn't want their property. Can you give them my business card? And what I'll do is I'll buy it from them and I'll make it nice. And then you have a nice property, and then you don't need to worry about, having somebody, with a bad property. And the guy says, yeah, no problem. So he gives me a property, and or he calls me and he says, hey, do you ever want to buy a fourplex in the Minneapolis area? And I said, yeah, absolutely. I'd love to do that. So I negotiated with this guy. I got a great deal on this property. I paid $135,000 for it, and it needed work, and it appraised at $190,000.
Mm-hmm.
I bought it with a first and a second mortgage. The second, so I only paid $5,000 or something down for this property. It was just ridiculously everything. All the stars aligned.
Wow.
Greatest property ever, right? I started fixing it up. I got people in there. I paid off the second mortgage. So now I had like maybe $35,000 into it. It was cash flowing like mad. I moved into it. I was living there. I enjoyed it. And that was probably 2000 maybe I bought it. And then in 2005, a tenant called me up and said, hey, I have a bullet hole in the side of my window, or in the side of my wall.
Oh.
And I was like, you're kidding me. And I went over there and I was like, holy bananas. I scared the hell out of me. And I was like, I do not want to I don't want to be in a property that I'm not comfortable in. Okay. And I had already moved out of the property. And then 2005, they said, well, here, I'll give you $400,000 for this property. Somebody give me $400,000. I was like, holy bananas. That sounds awesome. I will take it. And I took that money and I had a $250,000 gain. And what I did with that gain was I did a 1031 exchange because I didn't want to pay tax.
Mm-hmm.
And I invested in a TIC, or a tenant in common building.
Oh, nice.
It was an office building, and it was a Class A office building, and it was fully occupied with premium rents. Okay, all perfect. And guess what? That building went bankrupt, and I was 5% owner of a $25 million building, and I lost my $250,000.
Oh my!
And above and beyond that, every month I wrote them like a $1,500 check, every month for like a year and a half. And it was just like, oh my God, this is so painful. And eventually one of the owners was like, guys, I'm not doing this anymore. You can have my shares. I'm not writing another $1,500 check. And after that person decided not to do that, we tried to do a workout with the mortgage company, and we lost it all. Okay. But
it's terrible.
Best deal ever. I'll tell you why. Because I learned something from that deal. I learned that you can't buy a Class A office building, or any building. You can't, in my opinion, you can't buy Class A because you can't renovate it and make it nicer. You can't buy a 100% occupied building because you can't increase the occupancy.
Right. Those are for
And then the other thing, absolutely. And then the other thing is that they had premium rents. Now I didn't know anything about office. Okay. Maybe that's the fourth thing. Buy something that you know. But I didn't know anything about office. They were getting $18 a square foot, triple net. When the economy took a downturn, the people were one of the tenants was like, "Hey, I can only pay $12 a square foot," and we said, "No, forget you, get out of here, right?" And they left, and then all of a sudden we didn't have any money left. I mean, we couldn't refill that space, And then the next tenant was like, "Hey, all I can pay was $12 a square foot." We said, "Okay, we'll take it," But then it was like you just can't. It was very, very difficult to. It went bankrupt, and here's the downside, and here's all the lessons learned, right? Like we already talked about, you can't buy Class A 100% occupied with premium rents and expect it to go anywhere except down. The other thing that lesson learned is you got to invest in what you know, or at least with somebody And maybe the fifth thing is that you got to invest with somebody you're comfortable with. These people I invested with, I'd never met them before. I didn't know them. I didn't know anything about them. Right. And then it didn't work out because of that. So those are all, that was my horror story.
No,
and
thank
it
you
still
for
haunts
sharing
me.
that. Yeah. So So I have another question about deals. How do you find your deals now?
Well, that's a great question. Can you still hear me?
Yes.
Oh, good. Okay, I had to switch headphones. Those other ones went the battery
Yeah,
died.
I heard some
Uh,
static before.
okay,
Good now.
sorry about that. Okay, good. We're back in action then. How do I find deals? That's a great question because that's the number one thing everybody's always asking. Like, well, how do you find deals? How do you find deals? How do you find deals? That's why you got to get a deal under your belt, right? If you get a
Yes.
deal under your belt, like I own a bunch of condos. I own probably 42 or 45 condos or something like
Wow.
that. Okay. And the thing is that then you become the president of the association or whatever. And then you get on the board and okay. And then you're in the inside, then, like, oh, so-and-so might be interested in selling, or you go and talk to the neighbor and say, hey neighbor, I'd like to buy your unit. You know, you got to get out there and talk to people about the fact that you are a real estate investor and you're interested in buying.
Yes.
That's what you got to do.
I can't stress enough about, and it goes back to the same thing, do the deal, right? So not only you can go out and sell yourself, right? That yes, I'm ready to buy and I have done this many deals, but that shows to other brokers, agents, whomsoever you are working with, even property manager or insurance agent,
Oh,
that you're
exactly.
serious. You have bought it, you're serious about buying more. And so they become your referrals, right?
Yes, absolutely. And the other thing is that, like, so I've been looking at a bunch of multifamily deals right now, okay? But I haven't found anything that pencils out that makes sense to me, right? So
Right.
what have I done? I've invested with other people that have found good deals. And, and it's been tough because, like, the brokers don't want to call me right now because I just don't buy anything right now,
Right.
That's why I keep buying condos, and things like that, because they're easy. I know the neighbor. A couple times I've done it where people will say, hey, I have this property that I don't want, but will you manage it for me? And I'm like, yeah, absolutely, I'll manage it for you. And then every year I'm like, hey, I'm happy to continue to managing it, but are you interested in selling now? You
Nice.
know, and then another guy I asked the other day, I got called out. It was late night, and I got called out, and there was a water leak, and we got out there, and then the neighbor was out there, and I was like, hey, are you ever interested in selling? And he's like, are you buying? And I'm like, well, yeah, I mean, I'm always buying. Like,
Yeah.
I don't know. I'm just so used to asking everybody that question that eventually it just works out, Um, but that's one way to do it. Another way to do it is to look at the MLS. I mean, I found lots of deals on the MLS. Another deal is Craigslist, and then my favorite idea ever, which is a good way to do it, is if you want to buy like in a college area or something like that. Like I own 3 houses in Duluth, Minnesota. If you want to look up there, then all these landlords put their phone numbers in the ad for rent. Okay, so
Uh,
call all the landlords up. They're all half the people, I bet, in a college town bought the house for the kid. Okay, one of their kids, and ended up with a rental as an accidental landlord.
right. Yeah, I know
Okay,
some
I bought
people like those too.
absolutely. So just pick up the phone and start calling them and say, hey, I saw your ad for rent. I'm not interested in renting it, but I am interested in possibly buying it from you. Are you interested in selling it? And everybody's first response is no. It's
Right.
like, okay, well, but maybe, yeah, I bet if you called 10 people today, I bet one of them would say, yeah, I'm interested in selling. So
Yeah, and sometimes they are not ready to sell right now, but they may go back, discuss with their spouse or whomsoever family, and they may come back to you after a month or 6 months. You never know.
you never know. And if you stay on top of these people and you have them on a drip campaign, meaning like if you contact them every once in a while, then it works. So,
So,
yeah, no, absolutely. That's, I think, how you find deals. And you got to stop complaining there are no deals out there and go out and find some. So,
you mentioned about investing in other people's deal passively, right? And I want to go
perfect.
back to that topic. Someone who invests actively like you, why would you invest in other people's deal passively, and if you can elaborate on pros and cons of doing that.
Okay, I love that question, and I'll tell you why I invest in other people's deals. The first deal I ever invested in was one of my customers. I was selling them blinds, and I said, "Hey, I'm selling this fourplex. I'm going to have a $250,000 gain. You know, do you know what I can do with it?" And he said, "Well, yeah, you can invest it with me. I'm buying this next deal." Well, the advantage that I had with that particular deal was that, you know, he was in the industry. He had already negotiated the deal. He had done all the legwork. The deal made sense. When you buy a 100-unit building, you're usually getting a better deal per unit than if you buy a fourplex or a duplex, you know? So sometimes you can tap into that economy of scale, and you don't have to own the whole thing. So sometimes it's just easier. Sometimes they have a better deal than I have. I just recently bought into a deal, you know, a friend of mine said, "Hey, I need an extra $30,000. And I happen to have the 30 grand. So I was like, "Sure, I'll buy into that," you know, because the numbers made sense. So
Yes.
that's the pros, that you can get into a deal like that, you know, and you don't have to do all the legwork. And you know what? A lot of things are, you're an expert at something else, right? You might be an expert tile layer or something, you know. Well, go be an expert tile layer, you know. That's a great thing to be an expert at. Let somebody else be an expert at real estate. You don't have to be an expert at every single thing, but you still get to learn a lot by investing in other people's deals.
So that's
downside.
and
Yeah,
also you can invest passively, right? So it's totally 100% passive. So
absolutely.
some people, you know, who do not have time, or they don't want to do any legwork like you and I do, call people,
Yeah,
look at the properties, you know, scout through Craigslist and whatnot, right? For those people, this works out really well because they don't even have to research the market. They can diversify by going with different, you know, syndicators as well as in different markets. But yes,
absolutely,
I
absolutely.
definitely want to know the cons as well. So please go ahead.
Well, I mean, the cons are like what I told you with my horror story, right? I mean,
Uh-huh.
it's the less you're invested in a deal, the less control you have over it. Okay, so like that $25 million office building, I was only 5% owner. Okay, at 5% owner, I don't have the. I mean, I have a say. I can call up the asset manager and give them my 2 cents, but like, I don't have as much control over that as if I were to buy a condo and own 100% of it, right?
Right.
So there's less control, and it's harder to get out of them too. Like, you know, you
Uh-huh.
might be in it, and it's like, okay, well, now I need my 30 grand back or my 50 grand back. Well, if I own a condo, I can sell it. If I own a stock, it's even easier to sell it, you know.
Right.
They're just a little bit more difficult to get out of. So you know, there's pros and cons. You got to decide if it's right for your family. But for me, it just makes sense to diversify that way, because sometimes they find a better deal than I can find, you know.
Right.
Um, you know, you're in San Francisco. You know that market better than I know that market. I don't know anything about that market, right? You
Yeah.
called me up and said, "Hey, I got this awesome deal, and these are the numbers, and this is why it makes sense." Then it's like, "Oh, cool, okay, yeah, let's give that one a try and try it out again." You know,
Right.
so I'm all for that. Yeah, I'm all for it. So
Yeah, and I like the diversification part of it, right? So personally, I invest in, let's say, Dallas, Birmingham, Alabama, and Atlanta, Georgia markets. So I know those markets. Usually, I
yeah,
prefer to invest there on my own, but I also know that there are more than 20 other markets which are really good, and I like those markets. But I cannot go
yeah,
in every damn market because I operate out of state,
exactly.
right? So like I invested with someone else in Vegas market. Recently, I even invested with someone else
Oh,
actually
nice.
in an
Yeah.
Atlanta market. Plus, I'm planning to invest in a Houston market actually in 2 weeks, right? So those are some of the
Mm.
markets I would not venture out on my own because I don't have time. I don't want to stretch myself to all those different
Hey,
markets.
exactly. Even if you did research all those markets, you'd be good at everything, but not great at anything, right? So, I mean, it'd be hard to, you know, yeah. If you did all that
Right.
research, you wouldn't. You just had to be better off investment with other people. I totally agree with that.
So I have a couple more questions actually, and then
Yeah,
we can
yeah.
wrap it up. Any advice you would like to give to investors who are working full time and don't want to leave their W-2 job?
Dude, I'm so glad you asked that. Okay, because I don't think I do have some advice, and I think just like being a Cub Scout, you gotta be the best dang whatever you're doing that ever lived. Okay, if you're I sell blinds to apartment buildings. Okay,
Mhm.
and draperies to hotels. I want to be the best blind salesman in the country. And here's why. Okay. Number one, I want to be the best, right? Number two is that if I'm the best, my company is going to say, hey, what's Brian Doyle doing today? Who cares? Leave him alone. He's the best salesman
Right.
that ever lived. And he sells 4 times more than anybody else, right? So
It's
if
a
I'm
great
selling 4
point.
times more than everybody else, then they're going to leave me alone and they're going to let me do my thing, right?
Uh-huh.
If I'm just squeaking by and I'm kind of just showing up to work and I don't do a very good job, and I just kind of mailing it in, and I'm like, well, I'm not going to work hard over here because I'm going to be a rich real estate investor someday. Well, then they're going to be on your case. They're going to be asking for all this paperwork. They're going to be,
Uh-huh.
they're going to be driving you crazy with micromanagement. Okay. If you're the best, whatever, people just let you do your thing, man. Just be the best. I mean, absolutely, whatever you're doing, be the best at it that ever existed,
Yeah,
and your
and
company's gonna do whatever you want.
that this is again another great advice, and I can plug in the book called The Go Giver. Even in that one, the author mentions about providing value, right? So this is same thing. Provide
Absolutely.
more value than you are compensated for, and that will
Yes.
come back,
Yes. I love it.
right?
Never heard that. I love that. I'm going to read that book now. I never even heard that book.
Oh,
I can't
I'll
wait.
send you that book. It's amazing. I'll send you the
Oh,
name.
I can't wait. I
It's
can't
one
wait.
of my
Yeah.
favorite.
Because that's what it is, right? Go be like in the downturn of the economy. I used to hire people on Craigslist, and they'd be like, "Oh, the economy sucks." You
Uh-huh.
know, It's like, yeah, but it doesn't suck for the 5% of people that are the best,
Right.
because the 5% of the people the best are still getting work. If I have a staff of 20 salespeople and I have to lay off 19 of them, I'm gonna stick with my favorite or the best salesman,
Of
right?
course.
Yeah, so of course, exactly right. Just be the best at whatever you do. Step 1, be the best. Step 2, get on a budget. Step 3, buy some real estate and rip it off like a band-aid. Just buy something. That's my opinion, right?
So now
So
that we chatted about the book, this would be my last question. Can you share any of your favorite investment or personal development related book?
yeah, oh yeah, there's a million of them. You
Of
want just
course.
one or you want a couple?
Oh, you can throw out if you like couple. Yes, definitely.
Well, I don't know. It's probably everybody's read Rich Dad Poor Dad.
I
If
was
you
going
haven't
to
read
say
that, you
that.
have to read that.
It's
You
like
know what I mean?
every guest has mentioned that, and every time I mention that book, the book as well, right?
Just go
No
buy it. It's literally $6.50 on Amazon. I
doubt.
mean, it's like if you don't download that today, then you'll never be
It's the
successful, in my
best
opinion.
investment you will ever make on your as
Just
yourself.
do it. And then the other thing is you can give it away to somebody. So
Right.
there you go. You got for $6.50, you got a book you can read and a gift to give to somebody.
Mhm.
So that's a great book. One of my favorites is The Millionaire Real Estate Investor.
Yes.
It's by Gary Keeler. He's the
Very
guy
good.
that started Keller Williams, or I think.
Yeah.
And here's the deal with that one. You learn that you don't need 3,000 units to be successful. Honestly, you need like 20 houses that are paid for, and you'll have enough money to do whatever you want with. That book outlines it step by step by step, and that's a fantastic book.
Yeah, I love that book as well. So, how can my listeners reach out to you, Brian?
Yeah, no, I'd love to hear from your listeners, and I can even share some ideas if they reach out with specific questions or whatever. I'm happy to kind of chat with them about it. So the best way to get a hold of me though is my email address. My email is brian@doylepropertygroup.com, and I'll spell it for you. It's BRIAN at DOYLEPROPERTYGROUP.com. And I'll tell you one last book that I love that I really feel like I need to mention, because I'm looking at all
Sure.
the books on my shelf right now. And you gotta read The Millionaire Next Door if you haven't
Uh-huh.
read it. There's so many people in society that look at a nice car that drives by and say, wow, that person must be rich. And
Right.
honestly, it's not the case.
It's a
It's the
great
people
book.
driving the Honda Accords of the world, or the
Yeah,
Toyota Camrys of the world.
and that's what I have. I have been driving it since 2005. I don't want us to change it. Already
Oh,
sold.
it's a great car. It's like it's reliable and
It
all this stuff. And it's
works.
like, it works great, and it's nice size, and it's got a big back seat. And I mean, I'm telling you, it's like, you got to get your head around the fact that the truly successful people in the world are not the people that are the credit card millionaires of the world. It's the people that are building companies and building freedom from payments is what they're doing. So anyways, that's my parting book, I
Thank you
guess.
so much, Brian, for your time today. I thoroughly enjoyed this podcast.
Oh, ditto, man. I really, really appreciate your podcast, and I look forward to chatting again soon, I hope.
Yes, of course. Have a great day.
All right. Thank you. Have a good day to you.